Tarang Bhanushali, AVP-research at IIFL. Tarang, thanks so much for being with us at NDTV Profit. Hindalco is again zoomed up 5% today. We've seen a strong rally in some of the metal stocks, notably from the non-ferrous space. What explains this? Do you think there is a lot of optimism given the Chinese data that came out where the PMI showed an expansion after many months of not going anywhere? Is that the reason? Is there a fundamental basis for this rally?
Well, if you look at the aluminium manufacturing stocks, there were news of the government imposing anti-dumping duty on aluminium imports, which has led to the rally in both Hindalco and Vedanta. But when you talk of the whole pack, I believe the pessimism has quite reduced, and in fact now people are quite optimistic on the metal prices rallying further from here on, largely on the back of the supply side not responsive to the higher prices, and also demand. The growth is there. The people are expecting demand to revive in China. So all these factors has led to the rally in most of the base metal prices, which has further trickled down to the stocks manufacturing them.
Right. There was also some news today about the government coming out with anti-dumping duty on TMT bars from China. Do you think this was expected, and what kind of impact will this have on some of the steel companies?
Well, see, we are not a major importer of long products. If you look at our history, and then so hence yes, it is a positive step for the steel manufacturing companies. But largely, the price is been determined by the local factors other than the import duty. We majorly consume the domestic steel. Imports of bars and long products are quite low as compared to the whole basket, compared to the flat products. So I think it is marginally positive, but will not impact the overall sentiment of the industry. The domestic demand supply scenario largely determines the prices for long products.
Right, but Tarang, the entire steel sector has benefited a lot from the MIP with the government came through, and they are going to be reviewed sometime in December. But there is international opposition to what India has done, giving protection to its steel industry, and there is no denying the fact that many of these steel companies have benefited from the MIP. They've been managing to increase prices as well. Do you think that now one should be a little cautious about some of these steel companies that have benefited from the MIP?
Well, I don't think there would be any removal of anti-dumping duty on steel products. Largely, if you look at globally, most of the major countries now have put the anti-dumping duty on steel imports from China, be it Europe or US. So most of the major steel producing countries have put that. And I think even we have data which can support our claim of China dumping their material into India, as the prices are quite lower for imports into India. So yes, I think we can defend to some extent the anti-dumping duty. However, the pricing mechanism would change, or there would be some percentage medium which would be applied. So again, there would be some changes, but overall I don't believe that the anti-dumping duty can be removed in the near term. I think it is there for a year or so in the domestic market.
All right. So what does that do to the demand-supply dynamics within the country, the domestic area? Because there is an expectation that the capex cycle will start to turn perhaps a little later in FY17. How much a pricing power will be there for steel companies?
See, H1 was quite weak than what we were estimating. The consumption was quite weaker. The recovery was quite slow. Though in the last month at the end of monsoon, we saw some recovery in consumption. But overall, what we get a sense from talking to the management is that the demand scenario is still subdued. Pickup has not been major. The growth has not been major for most of the companies. It is only import substitution or increase in exports which has led to higher volumes for them. So still the recovery in volumes is expected, but I think it would take more time, as the industrial recovery is not that fast in the domestic market. So overall, I believe we would grow from the 1 to 2% range to 3 to 4% max. Above that, I think it would not be possible for the domestic market.
Okay. Then what happens to some of the stock prices of these steel companies that have run up a lot? Tata Steel, JSW Steel. Do you see a correction coming through?
Well, if you look at even this quarter's volume, JSW managed to increase their sales volume on the back of higher exports as well as import substitution. I think this play would continue for the rest of the year, and volumes will not be impacted for companies like JSW and Tata Steel. However, a sale would witness some pressure on their volumes because they are more of long products, and again, revival in infrastructure is quite important for them. So I believe sale would be under some constraint, and even when compared to JSW and Tata Steel, the preferred pick by the domestic buyers is JSW and Tata Steel. So I believe sale will find some pressure on their volumes, but other than that, I believe JSW and Tata Steel will achieve their FY17 guidance.
Okay, let's talk a little bit about the non-ferrous metals as well, because we are seeing strong rallies in Hindalco, Vedanta and Hindustan Zinc, NMDC as well. NMDC is a mining player and recently increased prices. Now, internationally, we are seeing a big rally in iron ore prices. Even coking coal prices have moved up higher. Maybe there's optimism about the Chinese factory data and the fact that the Chinese growth numbers came in as expected. But from here on, what is the outlook for non-ferrous space? And if your input prices of coking coal also go higher, what happens to their margins?
Well, on the non-ferrous side, I believe zinc prices would top out in a month or so. This is largely because see what happened in the first half was that there was acute shortage of material, largely because Hindustan Zinc had cut down their production, and also Glencore's mine was shut down. So this led to a acute shortage of material. Now with Hindustan Zinc ramping up their production in second half, the pressure, the deficit would reduce quite sharply because of that. And even with higher prices, we would see the smaller miners coming back to the market. So overall, I believe this would be largely the upper end of the band for zinc prices, and from here on we would see some price correction coming into zinc prices. Aluminium, I think, would stay in the current band. It would not fall further, or it would not rise because of excess capacity already in the system and support from cost curve. So over there, I believe we would remain flat largely in the near term. Coking coal, yes, there is a spurt because of shutdown of some mines in China and Australia. But I think in a quarter or so, supplies would resume, and then prices would again cool off from there. So I think it is a short-term phenomena, and then coking coal prices should move downwards from there.
All right. Amongst the non-ferrous space, then what would be your strategy? You were expecting zinc prices to top out, maybe not too much of margin pressure, but on the volume side, and the fact that some of our non-ferrous players are very efficient, if you compare them to the global peers, what does one do as an investment strategy?
See, we are quite bullish on Hindalco. That is the top pick in the non-ferrous space. The company has over the last 6 months managed to reduce their cost, and this was largely on the back of lower coal prices as well as higher volumes. So we like that space, and again they would continue to ramp up their new capacities, which would further increase the volumes for them. So we are bullish. Even on Novelis, the margins are expected to gradually increase with the higher share of automotive sheets. So there we believe there are more earning upgrades to come. Hindustan Zinc and Vedanta, we believe, are fairly valued with the current rallies, so we would not be buyers in that. Of course, we like the stock, but at current prices, we would like to avoid and maybe wait for further dips.
All right. So that's the view coming in on the ferrous and the non-ferrous space. For the steel space, you said that sale will come under pressure. preferred picks remain as Tata Steel and JSW Steel. Would you still look at buying a JSW Steel and Tata Steel?
JSW we would accumulate and declines. Tata Steel, I believe in the near term the performance would be subdued, but overall we believe that on further declines we would be accumulating the stock.
All right. Positive on Hindalco and accumulating JSW Steel. Thank you so much, Tarang, for speaking with us at NDTV Profit.